Welcome to the last episode of season five. And I usually like to close out the year on a little bit of what's coming in the next year. And for the last, I don't know, I think 4 years, I've invited astrologers and magical folks to give us placements for the next year. But this year, it's going to be me. And I'm not an astrologer, but I am going to be sharing some intuitive downloads for you today. And yeah, this is just stuff that has been coming through me. I've been getting the poke to share them with you. But before I get into that, I just want to give you a couple of updates that have also been coming through. So, in the new year, I'm going to be shifting away from Instagram and Facebook as my main platforms and concentrating on YouTube. And I'm also be going to be going faceless on all the platforms. And here's why. I have been working on visibility for a really, really long time. It's been sort of a practice, a vulnerability practice, a transparency practice, a self-love practice, as well as the business commitment practice. And what I've been shifting into this year is that I don't really want a personal brand. It's not really my thing. Um, and it's lost its appeal. And because it's no longer exciting for me or as exciting for me as it used to be, it's become a little bit exhausting. And there's every time I post my face, there's like a no that comes up in my body. And I just keep really wanting to listen to that. And I've also just seeing sort of like what things trend in my business. I'm much more of a word of mouth and relational kind of person. And yes, like online, like people get reminders that I exist and then they reach out to me and I'll still be doing that. But the whole word of mouth and relational piece is very resonant to me. It's very resonant of what I want to continue nurturing in my communities and in my business. And so it's just my business, the business structure is perfectly tailored to that strategy. So I'm going to be doing that anyway. And another thing that I've found about social media is that, the sense that I get, and this is like my nervous system talking to me, is that we're constantly trying to up the ante. And our social media is training our nervous systems. The way it's designed is that we keep needing to always want more shock content. And I'm just not that type of person. I don't want to do that. I don't want to have to create hooks and entice you in that way by um, grabbing onto a sense of scarcity or shock or, doing anything like that. I really want to focus on, my whole thing is trying to help people regulate their money nervous system. So I really don't feel like doing that is going to support you. And it's not in alignment. It's not in integrity with what I'm trying to do. And in the face of AI, this is another piece. Social media is changing so much. And I really want my words and my ideas, I want them to live in a place that has more longevity than the few hours they live on Instagram and Facebook. And so I'm going to be focusing my energy on artistic expression as well as on the written word. And so I'll be writing a book. You heard it here first. I'm going to keep myself accountable by sharing it with you. So definitely follow me on YouTube if you haven't already, and keep listening here for premium content. Definitely going to keep sharing this podcast. I just think it's like such a freeing space for me versus the restriction that I feel on other platforms. So yeah, so housekeeping aside, I was looking back on season five and thinking like, oh, what is it that I want to share? What is it that I want to like synthesize and bring to you? And I was seeing that we started with the topic of resourcing for the revolution, right? And we've seen that in this year, there has been of revolution happening. There have been, political things happening, economic things happening that have been unsavory, ICE raids, etc. Like just really terrible things happening to people. And we've seen that people have needed to rise up and meet that moment, politically, historically. In that episode, I talked about how inflation is going to continue to be a problem over the next several years. And of course, this is in the United States context, but it does affect people globally, but mostly people here in the United States. And inflation, of course, devalues your currency. It makes your money worth less over time, worthless and worth less. So go back and listen to that episode if you haven't already, because everything that I shared in that episode is incredibly relevant right now, and I don't want to repeat myself in this episode. But I do want to provide a quick definition of inflation so that we're all on the same page. So, inflation is what happens when the Federal Reserve pumps out money faster than the real economy can keep up with. So, when the Federal Reserve des decides to expand liquidity, which is just a cute way of saying that they're flooding the system with fresh dollars through asset purchases, rate cuts, or fattening bank reserves, those extra dollars don't magically create more goods or services. So now you've got more money chasing the same stuff, and each dollar gets weaker. So that's why prices climb while they smile and tell you it's all under control, nothing's happening, nothing to see here. So this episode is going to focus on a specific mindset shift and four assets. Well, it's the specific mindset shift that needs to happen in order for you to position yourself and thereby protect yourself against inflation. And though that mindset shift ties into the four assets that you need to be investing in now. And I'm saying this to you because I've had to make this mindset shift in myself, and I am actively investing in those four assets right now. And the other reason why I'm saying this to you is because most of the people that I sit down with, you might be one of those people, are in deep denial of what is happening in our economy, what is happening to our currency. You may be watching the news, but you don't seem to understand how it's going to impact your day to day. And or you may not recognize how quickly things are going to escalate. I don't know if you've seen the recent headlines that earlier this month, and we're in December 2025, FYI. In the headlines earlier this month, I thought I saw that a few specific billionaires have liquidated millions and millions of dollars of assets, meaning that they've pulled money out of stocks that have been performing really, really well. And, one could say that's standard behavior. You're supposed to sell high and buy low. It all makes sense. But because of everything else that's happening in the country and the whispers that have been coming in my dreams, I am feeling the tension. And maybe you're feeling the tension too. You're feeling the uneasiness, and maybe you're kind of like brushing it aside and you're telling yourself that it's nothing. And the way that many of us respond to this is that we hope for the best. We put our heads down, we follow our regular routines, and hope that whatever changes are coming down the pipeline won't impact us that much. And I think that's just human nature. I think that, if I weren't in the business of money and finance, I probably would be exactly where you are right now. Humans have a tendency to just resist change. We resist getting uncomfortable, right? We're routine machines. And when you pair that change, the change usually comes with discomfort, but there's a potential for really big discomfort. So we're going to avoid it even more, right? It's even less appealing to us. And what I have found from my own personal experience is that we usually have to hit a brick wall in order to make real changes. And we've seen that politically. We have to see people getting really fucking hurt or having the injustices be so atrocious for us to even move an inch, right? It's tragic, right? And I think that's part of what social media does is that things have to get really fucking shocking for us to move. And so this is the same thing with hitting that brick wall. The brick wall has got to be really big and it's got to be really fucking hard on your face. And so this is why I am sharing this on this episode. Hopefully that you recognize that part of you that is resistant to tearing down the illusion that maybe it's not going to be so bad or maybe it won't happen next year. Maybe it'll happen like more farther away from right now, and I can avoid it for a little bit longer. So, but I don't want to fan the flames of your fear. It's really important that we don't do that. This episode is really an opportunity for you to regulate and reorient to long-term vision, right? And wisdom. That is what I am trying to do here, rather than react to like short-term noise or clickbait or whatever. I just want to start by asking you a question, and I just want to take a breath here. I would love to know, or would love you to explore what has been taught to you in response to inflation. Like, how do you respond immediately, like your gut response to inflation, right? My gut response has been to like, let's accumulate, let's hoard, right? Is it holding cash out of fear? Like maybe you're actually like holding like actual cash, right? Like you've taken money out of the bank. Um, Maybe you're trying to scramble around and figure out what to do. Maybe you are doom scrolling the internet, trying to figure out what it is that other people are doing, right? You're trying to find safety in the crowd. Or maybe you are withdrawing from money decisions altogether and hoping that whatever happens doesn't impact you, doesn't affect you. And what I'm describing in those four responses are basically the four nervous system archetypes under any economic uncertainty, right? The freeze is going to be holding cash out of fear or hoarding. The fight is scrambling to do something, anything, and you don't necessarily make the best decisions in that state. Then there is the fawn of let's just follow the group, right? Let's just figure out trends. What are the trends that are happening right now? And flight is withdrawing from money decisions altogether. That's sort of the ostrich strategy of just putting your head in the sand. And I find that women tend to do that a lot because it's a response to overwhelm. So the reason why it's so important to regulate in economic uncertainty is because you want to remain agile and flexible. That is always what it's about. It's always about staying grounded, being alert but not panicked, right? And that allows you to be agile and flexible. Like that's in any situation. And I want you to keep in mind that, when I talk about the new economy, when I use words like that, I'm really talking about building something new, building something that hasn't been seen before, that has maybe elements of maybe indigenous wisdom or elements of things that you've seen before, but of course they're going to be brand new. They're going to be quote unquote rebranded for the current historical moment, right? And we can't build a new economy on old nervous system behaviors, just the same way that you can't have a new, healthy, evolved relationship by paving it with old road, right? We can't pave a new road with old pavement. So we won't build a new economy on old nervous system behaviors, on those old tried and true grooves. We have to create new grooves. And this is where the mindset shift comes in. And I know that inflation creates anxiety, and an anxious nervous system is going to make poor financial decisions. So stability is your first asset class. So regulation lets you think strategically and not reactively. So a regulated money nervous system will allow you to steward resources instead of hoarding them and make long-term grounded moves rather than fear-driven ones. In a volatile economy, emotional regulation is really a competitive advantage. So it's going to be about being in your sovereign leadership, right? People are going to follow the regulated nervous system. It happens here in Bali, I observe dogs a lot. Dogs follow the regulated nervous system, the most regulated nervous system in the pack. It's not about brute force, strength, anything like that. And it's that inner wealth that keeps your outer wealth from leaking, right? Whether it's through spending on the wrong stuff or making like rash decisions. So those are where the leakages happen. Or not making a decision at all is also a leakage. So let's talk about the mindset shift first, and then we'll go into the other three um, assets. So the mindset shift is that you need to buy instead of save. Okay, this seems really counterintuitive. And specifically, what you want to buy are things that hold value and hold value over time. So you want to be spending the dollars that are volatile and losing value on things that inflation can't shrink. Okay? And these are called real assets, and they include metals, real estate, land, and equipment. That is, right, that those are some of the assets. So real assets are physical, they are finite, they hold their value even when the dollar is losing muscle, let's say. So when the currency weakens, tangible assets often strengthen because they reflect actual scarcity, right? Like natural resources aren't infinitely, right? Like they're not infinite. They do have a stopping point, right? We can't just destroy rainforest and say, oh, it'll grow back, but we have to like chill on it for a second, right? So metals have an intrinsic demand. Land is limited on planet Earth, and equipment creates output. And then real estate becomes more valuable as replacement costs rise. So let's talk about metals for a second. I want to talk about each of these in a little bit more detail. So I want to talk about like gold performance. So gold has had a strong overall growth. So gold has seen substantial increases with annual returns averaging around 9 and 10%. Yeah, over the last decade. So gold has performed really well in recent years, and that has been 2020 and 2024, driven by global economic shifts and, of course, inflation concerns. With some reporting annual average returns of over like around 14 or 15%. That's like incredible. That's incredible return when you think about the average rate of return being around 6 to 8% in the stock market. So the relationship gold has to the dollar is that it's traditionally inverse. The gold and the dollar have sometimes moved in tandem since 2008, both rising, but this dynamic can shift, right? Let's shift to silver. So silver has a higher volatility, but still has really strong returns. It's had impressive percentage gains over 5 and 10 year periods, and it's been outperforming gold in shorter spans. So there's a large portion of silver demands, nearly 60%, that come from industrial uses like electronics and solar panels, for example, right? So it's sensitive to economic cycles, but it's also a beneficiary of some of those clean energy trends that, we really want more of in the future. So that's why silver is very strong. There's a recent surge, 2025, this year. Silver recently broke a 10-year high. And again, this is the strategic value. So it's had a strong recent momentum. And the way that it compares to the US dollar is that, both both gold and silver, they act as inflation hedges, meaning that their price in dollar rises as the dollar's purchasing power fails, right? Or falls, rather. Maybe that's a Freudian slip right there. But over the last decade, both gold and silver have generally provided really strong returns and outperforming the dollar's steady depreciation and often beating other assets like stocks, the S&P 500, mostly post 2020 or like 29, sorry, 2009. I'm still thinking in 2020 terms. Although has had much more volatility. So you want to keep it for the long term, right? Versus the short term, because the short term does go up and down, right? And I've included an affiliate link to a metals investment platform that I really like in the show notes. So definitely use that if you want to buy physical gold and silver, but also there's an opportunity for you to buy gold and silver that is in a vault. Okay, so you don't have to hold it and carry it around with you. Although it's not a bad idea to have both. So let's talk about land. So why land is generally considered stable. And I know that for you, this is, I'm preaching to the choir, but land is often viewed as resilient, long-term investment for several reasons. It's obviously a finite resource. The supply of land is limited on planet Earth. We're not going to make more of it. And that creates an inherent value. But there's also like we say it can't be lost or stolen. Obviously, we have stolen land, but it doesn't depreciate, do the wear and tear like a building does. And land values often rise with inflation, and it helps preserve the purchasing power during economic uncertainty. Land investments aren't subject to daily market swings, and like, investor sentiment often affects stocks, right? Like stocks are more emotional versus land. Land is not very emotional. So, land also offers itself to multiple uses. We have residential, we have commercial, we have agricultural and recreational. And there are multiple income streams that you can have through leasing, giving the owner control over the investment and options for future development. But the reason why not all land is a stable asset, right? We have to be clear that just buying a house, that doesn't mean it's an appreciating asset. The stability and profitability of land are not guaranteed and can vary widely. Location is what matters the most. So, owning a remote parcel of land without amenities, without utilities, or without infrastructure is going to have limited value and it's going to have a low demand. So it's going to be not a super stable, or it's going to even be a poor investment. So on the other hand, having land growing near urban centers or that has some sort of planned infrastructure, maybe sources of water, for example, or maybe a year-round growing season, depending on what your aim is going to be more valuable. And it's an illiquid asset, so it means it can take months and even years to sell, depending on where it is, depending on if we're in an economic downturn or not. So that's something that you want to keep in mind as well. You want to keep in mind zoning restrictions, environmental regulations. Is it a protected wetland? Are there unclear titles? Are there existing liens on the property? That can severely limit the use and value of a property and lead to legal complications. So you want to have all of that in mind. Vacant land doesn't typically generate immediate income, and it's going to incur ongoing costs like property taxes and maintenance expenses, like cutting grass, something really simple like that. So if you hold a parcel of land like that for a long time, expect those costs as well. You want to also consider environmental and physical risks. Like land can, this is where location comes into play as well. Land can be vulnerable to natural disasters and floods. I've seen a lot of that here in Asia recently. It can be subject to wildfires, think California, and that can cause, you know, substantial damage and obviously reduce its value. So that's all I'll say for that. Really, the land, when I think about land, most of the people that I sit with want land in order to live on it, in order to have sustainable food source. That's what makes it an attractive option for me as well. So let's talk about equipment for a second and get into that because this was one that confused me when I started doing research for this podcast episode. And I didn't realize it was considered a long-term asset. It was very interesting. So equipment is essential for operations and income generation. Surprise, surprise. So, equipment is crucial to a business's core operation and directly contributes to producing goods or services, which in turn generates long term income. So, this operational necessity makes it a foundational asset for sustained business activity. So, think heavy machinery, manufacturing equipment, certain specialized commercial equipment. And equipment is classified as a non as a fixed asset on a balance sheet, meaning it's not intended to be like a quickly converted into cash. So it's illiquid and it has a useful life for more than a year. This long-term nature appeals to investors looking for stable investments rather than short-term gains, right? I'm a long-term person all the way. So maybe you are too. So these are assets that don't really care what the Fed is doing. They track utility and need and not policy theater. So this is really like I think that's a point I really want you to take home. Tracking utility and need. Think about the future and the things that we are going to need in an unstable future. In when money is losing value, what is it that's really going to be meaningful? And I'll say a little bit more about that later. So let's also talk about business assets. This is the third assets, the land, the metals, and what else did I say? And the equipment are the second. The first was nervous system, obviously, and then now the business assets. And these are IP, education systems. So inflation is going to be punishing the people who only consume, right? It's going to be felt by people who are more consuming. And it's going to be rewarding people who create, who really maybe have that machinery and are generating things, assets that we actually need. And business assets give you leverage. It can be a skill set, it can be a process, it can be a brand, it can be a system that allows you to generate value at will. So when prices rise, your ability to produce cash flow, raise your rates, package knowledge, or automate some form of revenue becomes a shield for you. IP and education, they don't inflate, they compound. So systems will help you earn even when the dollar is wobbly. Obviously, when you're thinking about business assets, in the context of this conversation, it's especially important to consider what I said earlier, to create something that people actually need. Because when inflation increases and money's tight, people are going to be they're going to be even more discerning. They're going to buy only what they absolutely need. And a lot of the reasons why, a lot of businesses lost revenue this year is because people got a little tighter with their money. They were more mindful about where they were directing their dollars, and they were making more conscientious decisions about what they were going to buy and what they could do without in the moment. So let's talk about that fourth and probably the most important asset that I want you to be investing in right now. And those are relationships and alliances. In an inflationary world, isolation is going to be so expensive. And unfortunately, in the US, with our individualistic mindset, you're going to really need to think community. You're going to think, let's band together as neighbors. Community is your greatest form of wealth, and it can't be devalued by any monetary policy or politics. So when you're in relationship with skilled, resource-rich, values-aligned people, you gain access to knowledge, shared labor, opportunities, and ultimately protection. Alliances help you source what you need without having to rely on the formal existing economy. And in unstable money environments, communities become the real safety net, not institutions. And I think we're seeing already, you can observe a little bit of that already forming, right? So this is not, it's it's not new news. Okay. So I want you to think for a moment about the skills that you may have that you can share with community. What can you share in exchange for something else, in exchange for other goods and services? What goods and services do you have? Maybe you know a lot about herbalism and how to heal common illnesses. Maybe you have other types of healing that you can offer. Maybe you're the type of cook that can take a bunch of random ingredients and make an incredible meal out of it for a group of people. That's super like important skill to have. Maybe you have something more concrete, or not more concrete than cooking, but maybe you have woodworking skills, or maybe you know a lot about permaculture, right? Super necessary. Maybe you know about water systems and about filtration systems. Maybe you know about like, I don't know, growing certain types of fish in your backyard, right? All of those things are super important and skills that you can share. And you want to be thinking about learning some of those skills, or improving some of, or building on some of the skills you already have, right? To be able to barter them and share in community. So those are the four assets that are going to be increasing your sovereignty alongside your stability in the context of currency devaluing and inflation. So just to reiterate, I'm scrolling back here on my notes. The first, of course, is that nervous system stabilization. Stability is, then the second one is called real assets because they include metals, real estate or land, and equipment. Okay. Then we're going to talk about the business assets, really having business systems in place, and either investing in business or creating businesses that really offer people what they actually need. And then there, lastly, community resources, these relationships and alliances, and learning how to be in community. That's something that I'm going to talk about in a future podcast, is really having the skills that you need to function in community, because a lot of communities fall apart because people aren't able to nurture relationships and build long-term relationships. So again, if this podcast, this content is resonating with you, hit the like and follow button if you're on YouTube. And I invite you to get on my email list and, continue listening to the podcast if you want to stay in connection. And we can be relational wealth in each other's lives, right? That's how I see it. And as I mentioned earlier, in the show notes, you'll find a link to where you can buy metals and where I buy my metals. There's also a link to apply for a complimentary financial strategy session with somebody on my team. And of course, if you want to work with me, educating people on these types of topics, you're welcome to fill out an application to join my team of money rebels, revolutionizing the financial services industry and systems. So I'm wishing you a peaceful and regulated closing of the year and a resource-rich 2026. Love you. See you next year.